Okay, good morning traders. Welcome to the Bookmap All Markets webinar. This is Bruce at Bookmap. We'll be going through the live order flow analysis, looking for opportunities and outlining what they look like in the order flow in Bookmap, right? Bookmap is a software that can very clearly show the limit orders behavior over time, as well as all the transactions, as well as the market structure. These are the main components of the market. A lot of other platforms that we have all accessed over the years are with aggregation of data, of some sort of period of data, and a lot of different derivatives of time, price, and volume. And I think the main reason that we all access this kind of data for so long is because we didn't have the technology to look at anything different. It was limited. Well, that's not the case anymore. So we'll go through the order flow and show you how to use this and integrate this into your trading. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so hold on just a moment here. Think I can do what I want to do here. Yeah, I think I've got to get rid of this and add another one. Okay, I guess I can't. Yeah, hold on a minute. Okay, now I can. Got it. Okay. Got it. Got it. All right. Okay, well, we'll check it out and see what's going on in here. And what I wanted to cover today, we're looking at the NASDAQ here. We'll look over at the S&P E-mini. We had non-farm today, as you guys know. Let me see if there's any questions as well. Okay. Good morning, Stephen, Rob, Alan. Yeah, no questions at the moment. Let's see over in YouTube world. Good morning, Dieter. Okay, guys. All right, so we can get started now in more detail. All right, so let's just take a big step back, look at this picture here. What's going on? We have had a lot going on this last week over in Bookmap. We'll actually step back, look at even our candlestick chart here on the daily on the left, the hourly in the middle here, and the 15-minute on the right. On Monday and Tuesday, we talked about the outside day. Okay, this is kind of a review, and this is just such an important strategy or understanding of the market and how the mechanics work on all time frames. Okay, so let's review this first, and then we're going to look at it within the order flow in Bookmap. Now, the strategy for an outside day is extremely simple. You look at the previous day in a candlestick. Now, on the daily chart, okay, not on the hourly, not on the 15-minute, on a daily chart. You look at the previous day. So look at yesterday. We had this huge drop. Look at this big red candle here. And then look at today, and we had non-farm today. Today, one of the second most important economic release that we have in the market. At least for a majority of markets, and the employment report and numbers. And look at the volatility for this day. Okay? It's not much. It's all within this previous price action here. From the previous day. This is an inside day. Okay, yesterday became an outside day once it traded below and accepted below the swing from the previous day here. Okay, So it's a really simple concept to understand, and it is such a huge mover, or you can capture this in a strategy and make really good money out of it. And it is highly likely for it to continue in a direction. There is a simple market mechanic to understand why this happens. Okay, it is because the market is reevaluated somehow, and traders move it away from a previous trading area, a value area, okay, where it was comfortable trading back and forth, and it has been reevaluated, and it is now trading outside of that area and accepting outside of that area. Okay, and typically it happens on very large volume. Look at the hourly chart here, even the daily chart here. Well, the daily, I'm not so sure how this works in rhythmic, but we can look at the hourly and we can see these huge candles or bars here for volume, okay, on this outside day. Okay, now we had non-farm this morning, so we have inside day, but we also have pretty high volume. So that's to be expected. 15-minute chart, I think, shows it even better. You can see here, this is the non-farm spike right here, but all of this in here, huge volume. It is this drop here. Okay, this is why we look at volume as defining a range, and where it dropped from, where they came in, where they're going to support it, or offer more in a certain area. So we look at that within the order flow in Bookmap. All right, so what do we have today? We had our non-farm, and the numbers were good, and this is the move that we've gotten so far, okay, after the cash open. All right, so here's what it looks like in Bookmap. And we can see this back and forth in here. We see high liquidity on the offer up in here, high liquidity on the bid down here. And then you can see before the event, these guys pull their liquidity. Okay, so where is price going to go? It's going to go to where it finds other liquidity typically. Okay, so up, well, probably it would come up and shadow into this area. And then I'm surprised it didn't come back down into the 51.90 down here, or down in 51.80, which is pretty far away. So this is another study to add into a potential strategy here, is historically looking at the numbers and looking at price movement from the initial move after your economic events. This can give you very good information on where price might go, how far it will go. So what happened here is we see this big move down, and then it chops back and forth, and it comes right back up above the where it dropped from, right into high liquidity here on the offer. A little bit higher, and then it just drops down. Okay, so then look at the liquidity here now on the bid at this 52.04.03 area down here. We come down toward it here, and we don't come any closer. That's it. It never traded into it, never tangled with these buyers on the bid. This is giving us information, right? So then we see our 9:30 cash open right here. Some volatility, some selling coming in, but buyers lift it away from all of this price action in here. It accepts higher. It comes up and trades into high liquidity, pulls back, trades into high liquidity here, okay, 52.20, a little bit through it, down to the swing here, and then we're back up here again, okay, at the highs of the day, at least for the cash session here. All right, so anyway, we just kind of went through the price action in here after the economic event, and getting a feel for sentiment. And the sentiment is right in front of us on the bid and on the offer. In fact, one of the traders that instructed me on these markets and how liquidity works was he said it in a very articulate way. Stated that this is advertising here at these areas, and there's a lot of larger players they have I mean massive size that they're putting down here on the bid or up in these areas on the offer. They are telling us what they think is value in this market. They are very, very plainly telling us, I will be a seller up here is what they're saying. I will be a seller up in these areas here as well. They will be a buyer down here at this 03 area here. Okay, that's what they're telling us. And this is an excellent guide moving forward. And that's why we want to align the liquidity in the heat map here with whatever it is you're looking at. It might be swings, it might be floor trader pivots, it might be Fibonacci numbers, it might be volume profile areas, okay, points of control or low volume nodes or whatever it might be. Okay, look for other traders to be bidding and offering in those areas. Now the thing that we want to understand is the context between that and what the aggressors, the market buy and sell orders, feel about that liquidity. So here we're getting this sentiment or context right in front of us. They didn't even trade into this. They never traded into it. And look at the sellers in here trying to reach it back down here. They didn't get very far with it. They didn't even make a lower low from the cash open right here. And then buyers come in and move it away from this area here. Okay, test high liquidity here and here. And then we get a pretty deep pullback and we're back up here. Right? Now, let's look at the condition in the context of being up in this area here. So this isn't bad. We see that buyers coming back in, and we see a lot of selling. We see another test, some back and forth in here, and we have another move up here. Now, what are these sellers telling, or what does the price action and volume and liquidity tell us up here? Let's go through the criteria. One is there's not a whole lot of buying up here. Okay, previously, look at the bars, look at the dots, look at the color and size of the dots, okay, and where they're transacting. Up in here, they're transacting into higher liquidity, and they're all kind of transacting up at the top here. Up here, on a retest of that area, we are not seeing that. In fact, we're seeing more sellers up here. Okay, so and we see quite a bit of selling in these areas in here. Okay, we make even a lower high here. All right, so that's a double top, or I don't know if you want to call that a triple top, but we would look for sellers to try to drive this now lower, okay, into first off this little area here where the buyers first came in, but I think we can come back down into here, 19. Okay, maybe even lower. Maybe we'll even break this and trade back down to 03 liquidity down here in the bigger picture. Okay, this is how you can start to align your strategies together, by understanding the context of the liquidity and the volume up at these swings. Right, so now the question is, how do you want to play it? Okay, because that would be the bigger picture strategy. This is a double top, right? Well, then how do we get involved into it? All right, well then we're looking for an entry, and we'll take a position here, and I just want to show the some of the trading functionality here in Bookmap. Now, again, this is in demo, and this is just going through this criteria, right? So I don't want people to trade this. It is not a trade recommendation. It is a demoing this criteria and what we're looking for. Okay, so we just got in short here, and just one contract, one position. Now I want to go through something in here and why I kind of jumped in here. Because I'm kind of hoping it goes against me here, and I'm going to widen out the stops and the take profits here for now. Okay, because I want to show you some of the trading functionality in here and why, or considerations in here. Okay, because immediately it's gone against us, which is fine. You know, the market will go back and forth. But the bigger picture is what we had just analyzed and what we're looking at here. Okay, and we're looking for the drop down to this 20 or 19 level, and then potentially a bigger move here, right? So I was kind of hoping this would go more against me, and it might. Because I want to show how to kind of consider to scale into a position. Okay, let me check on questions here. How we're doing, and because I'm off rambling here, and just make sure that you guys. Okay, Kenobi. Even though they're advertising at those levels, do we care about their why? Well, we care about the context. Okay, that's what matters. That's what gives us an answer. This happens in stocks. It is even clearer in stocks, I feel. A lot of, you can see here, let me just demo it here in Apple. Look at 930 here. Look at these huge orders that come in here, okay, on the offer up here, on the bid down here. This is dictating the market. Okay, because these are where the majority of the sellers are. These are the majority of the buyers here. So there's, maybe the term isn't quite right of advertising, but they certainly are. They want to be sellers up here. Okay, now we wait until they come up here and they trade into it, and we verify that. A lot of times, maybe they'll get cold feet at the last second, pull it, and add it higher. Okay, and that's part of the game, right? But the important thing to understand is someone is there. Maybe they're advertising, maybe they're not. That's maybe not the right word, but they are showing I am a willing seller up here. Okay, so for all of the millions or thousands or tens of thousands of, you know, hundreds of thousands of dollars of analysts, of research, etc., that all sorts of people working in the institutions have come up with, they are telling us something for a very cheap price. They are telling us here's where we will be sellers. That we think it is, you know, a sell up here, not down here, up here. All right, I hope that makes sense. This is, yeah, exactly. So you're welcome, Kenobi. I hope it makes sense. Wow. I just funny thing here in New York City, and I think I just experienced an earthquake. Yikes. And I'm from California originally, so felt like it. Anyway, so let's get back to it. This is what they are considering value for them, right? And look what the aggressors in here feel about it. You know, it's like, well, they may, a lot of times you'll see these stocks like, these traders with their limit buys down here, they'll be in here all day long. And they may be there next day, next week, etc. Just waiting to get filled in these areas. But they may not trade that day. We may see price move away heavily. All right, so that's fine. But they're still in here. But we see the aggressors speculate and get price to move price up into these areas in here and transact with these sellers up in these areas here. Right. So I hope this mental model is helping you a bit, Kenobi, understanding what liquidity represents. Okay. I mean, it represents very simply, these are seller or buyers down here on the bid. That's it. Okay. They're limit buy orders, and that's all they are. Now the beauty here in Bookmap is we can see at 9:30, look how everything shifted in here, and these guys actually got filled in here. A lot of the liquidity got filled in here. Okay, some pretty big transactions in this area here, and then looks like some of it might have pulled. And then look at the liquidity in here. See how they kind of chased up after it? Here, also here. We do see some on the offer up here. Okay, now this is a different game. But this is actually a really good example for a lot of people newer to Bookmap, because we get this question all the time. Well, doesn't liquidity act like a magnet? Let's just put it this way. These are where the buyers are. These are where the sellers are. It is an auction. So if sellers want to reach the buyers, this is where they can transact and do business. So yes, in that sense, it acts like a magnet. Okay. Now here we have a very quick imbalance in the auction process. Okay, we have very high liquidity on the bid here, and in here. Okay, we want to understand the reaction of other traders in the market. This acted like a repellent. So you can see the transactions here, that it traded into that high liquidity right here. Okay, and funny, I mean, it's not a whole lot of, it's kind of weird action in here. There's a lot that actually, a lot of this, a lot of the buying in here, well, we see 33,000. Okay, so the selling comes right into that buying right in here. Okay, but we can split out this data and look at exactly, 24,000 shares, okay, traded in here. Right. There was also some buyers as well. Okay, 9,500. So quite a bit of buying too. So some back and forth in there. But regardless, the bigger picture is, yes, they transacted, and 24,000. Right. And then look at price, how it bounces away. And then this liquidity acted like a repellent. Okay, they're chasing after. It's like, come on, sell to me, and the buyers they don't want to sell to them, or the sellers don't want to sell to these buyers. So we see price moving away. Okay, now finally they took them on here on the offer. Someone came in with high liquidity on the offer here, and buyers said, well, we'll transact with you, and they did. Okay, and they also transacted with these guys on the bid here at this higher level. Right, so that's, in plain terms, just trying to understand what's going on in here. And like I said, and why I'm looking at Apple is because it is a very simple thing to take a look at here. Understanding liquidity and Kenobi's questions about understanding what it represents in a mental model for it. Okay. All right, guys, excellent. Well, let's continue on. Let's jump back and what happened to our trade in here. Okay, so we see that move into into 19 here. And let's do some scaling in here. Now I don't know what's going to happen in here, but I want to demo this for you guys, and we'll look at it, and then we'll have our justifications and some criteria based activity in here, right? So we're going to go with this idea here. Okay, our idea is still we probably should have taken some off, maybe either here or at the swing down here, which is a good little area. Okay, but maybe we can still do that, and we just got to pull back to here where it dropped from. Right, so let's add another one in. All right, so we'll jump in here, and I'm gonna wait for a small pullback to about here, and let's see if we can get filled. All right, so we're filled. Okay, so now I scaled in. So our first cell was up here, and our second cell is here. Now I'm going to widen these out again, right? So now, and I'm actually hoping this still goes against us, and I want to demo or show you why, okay? Because now we've got a little more to work with in scale here. So the concept that I wanted to cover here was that if you're looking for this to drop, yet it goes against you, okay, well, you're still your criteria in here is still that you're looking for this to move lower. And this did move against us here and here, right? So the criteria though is, up to here basically, you can still be a seller, right? And the way to scale into a trade is, now maybe you have a bit of FOMO issue in here, and you're thinking, well, I don't want to miss it. All right, so I'm going to get in here, and it goes against you. All right, so the way one way to look at this here is then add in a third or half a position here. Add another one up here, right? Because maybe you get a pullback and you can get a better price, right? So I mean, maybe it's or you just wait for a better price and you miss it, right? So this would be maybe testing things out, seeing if you can average into your position. Okay, now one of the things that's very dangerous to do here about averaging into your position is that you you're adding to a loser. Okay, now you have to have criteria here for your trade management. This is essential, right? It has to be your overall risk up here. Okay, what I'm risking up here, this risk, it has to be your maximum risk that you take on a trade. Let's say, suppose it's 1% or 2% or whatever it is. Okay, so then this is only a portion of it. Okay, this is the only way to add into or scale into losers. Okay, so basically it's a strategy, and it's not really scaling into a loser in that sense. You want to get filled in a specific zone or area. All right, so then that's what you're willing to risk. All right, that would be your overall risk. This is extremely important to understand, and it's when this does go in your way and you don't get to put on your full size contracts, you get a small winner out of it, but that's all you get. All right, so, and you have to be okay with that, because otherwise, if you scale into a loser, now you're talking like maybe 3-4% up here, and then this is gonna really hurt, and that's just bad account management, bad trade management. All right, so Anyway, that's what I wanted to cover in here. So scaling in and scaling out. Think of it as a zone in here. And then your criteria still has to hold, right? So, look at them come right back up into this area here. The buyers are coming right back, and we have high liquidity at a lower level here at this 52.30 that has come in. Okay, now how are they reacting? They're starting to pull a little bit. Okay, so now what we're looking for is, again, the context up in here. Okay, so are the majority sellers still in our criteria? Let's go through it. This is a double top criteria in here. Okay, so it's still holding. And basically, we see the buyers up here into high liquidity, big sell clusters. We actually even make a lower low here down to this swing, and then the move back here on very low buy volume. Okay, so this is still in play, right? And then look at the selling that came in, and it made a lower low here, right? So this is still in play. Okay, this is the concept of the trade and the criteria of the trade. We just went through it. Now we can use this tool in here, and we can make our own criteria. I'm not going to do that right now, but it just takes a little too long. But we can use our setups checklist here and make our own criteria and check off the box and then also give it a score. Right? And we're just going to go and I don't have the time to go through it in the live webinar here, but our criteria for this double top is high liquidity on the offer. We trade into it. We want to see sell clusters on the swings low, which we got, and then on the retest back up here, we want to see very little buy volume, basically exhausting out up into this area here. A lower low would be better. And then also we want to see high liquidity here. Now we have all of that except for a lower, it's kind of an equal high here. So all of this criteria is still in play. And we see a lot of sellers that came back down into here. Right? So anyway, trade management wise, it would have been good to take some off either at this 19 or the swing down here at 16. Right. Now we just sit and we either it works out or it doesn't. This is our trade setup with our criteria. All right, let me get back to any questions in here. What are the two big liquidity orders on the bid and ask, and what should we be looking at? Which ones to get executed first? I'm not sure what you mean on the bid. You mean down in here at this 03, JJ? Is that it? All right, so now, this yes, at 03. Okay, so let's see. Well, yeah, I mean, we're looking for the aggressors like to charge after this liquidity down here. Okay, and right now we're in really back and forth environment. So in fact, buyers are likely to come up and retest. They're coming back to retest this area here, as you can see. Right now, we're just going to stick with our criteria. And now you can see the buyers coming in, and are they trading with this liquidity? Yep. Yeah, they are. All right, so now we have like a triple top, not a double top. So the yeah, I mean, this is the bigger picture here. Let's just take this zone here, right? This was our kind of entry zone in here, and I'll keep it actually. And what we're going to do instead is we're going to make this is our kind of bigger zone here, right? For the back and forth action. And now I'm going to take this, and then we'll make a measured move out of it. Okay, so somewhere down in here, this is a good area, and for those sellers to reach the buyers in here. Now, measured moves, they seem kind of magical. It is just, it's pretty simple to understand. It is within this trading range here, we're looking for it to break that range, explore price to kind of an equal range. And the reason being is that these swings in here, there's like only so much market breadth of buying and selling pressure that it reaches. Okay, so this would be kind of that maximum down here, probably around the figure, you know, down around this 02, 01 area here, 02, something like that. Okay, so and that's what we'd be looking for, is that measured move into this liquidity here. Okay. Now, what about our stops? Like, we can even look at this here, and if we see a measured move the opposite direction. Okay, so let's measure that up. Okay, because this is a way to also look at our stops and trade management. Okay, so the measured move on the buy side would be up around this 43 to 45 area here, okay, if we get a lot of buyers, okay, to trade up to that area. And we might. Okay, we might. So you know, how do we want to manage our risk in here? Okay, maybe we want to lower our stop loss. Okay, maybe the breathing room in here is like we want it to work immediately, and we're not looking for like maybe half the move here, or a percentage of this kind of range in here, right? We're looking for something a lot tighter. It either works or it doesn't, and if I got it wrong, take me out immediately. Okay, so anyway, just different ways of looking at your trade management is what I'm trying to cover here. All right. Okay, well, let's take a look here. As this goes against us, what does it look like up in here? Okay, we already covered these two areas here. What about this retest back up here? Okay, well, some buying in here, but it's still pretty low. And then here's another retest back up here. Buyers trying to take this higher here. And how's the liquidity look? Okay, well, there's a little bit higher here. We see at 35 liquidity up here. And really not too much more. Not too much on the bid at a higher level. Maybe some around this 26 or 25 level. All right, how about our bigger picture? How's that looking? Okay, well, you can see on the 15-minute chart the range that we're talking about in here. And yeah, not too much more. You know, maybe a retest back up into about here, which would be about that 35 level. You can see, okay, it would be the same as this swing here, so 35 maybe. And we can see that there's traders thinking that they're up here at 35. Okay, so what do we think of that? let's take a look here. So yeah, I mean, maybe we see the move. Our measured move would be up into this area around 45 or so. Is that right? 40. Yeah, 45. So yeah, that's a possibility here. All right. But anyway, we had our criteria in here. Didn't manage it too well. We were looking at Apple, where we should have would have been lovely to have two positions and get out one here and then get stopped out at break even on the next. But we didn't, and then we were thinking that this price action here, we should see maybe a retest back here and then a continuation down. Instead, we see that this has turned into kind of a pivot here where the sellers are upended by the buyers coming in here. Okay, so anyway, that's if we can see more, if we get more sellers to come in, they got to get through this kind of 22 level, 23 level here. All right, here come the buyers. So yeah, we're getting a breakout here, but our criteria was and our understanding of the trade still holds. Okay, I mean it held up into this point, and now it's kind of up for grabs here. Okay, now we're looking to see if these buyers are trying to establish and break away from all this price action in here, and it's pretty good buy volume. Okay, so yeah, they're trying here, right? So it's a stop run though too. So we need to see this stop run, does it accept? Okay, because a stop run is just a stop run. That doesn't matter. Does it accept above 30 though, is the question here. Okay, that's what we want to determine. Because after a stop run, you know, a lot of traders in here, we got it wrong. And then it slips back into its previous range and then can retest to the other side here. Okay, so that's what we want to determine, and we can see that the sellers are coming in, and it's not quite clear yet if we have or not, but it's looking pretty good. Sellers just down to the swing here at 28. We're looking for the swing down to this kind of 23, 22 area here. Yeah, let's see. Did that liquidity trade in here? Yeah, looks like it. Okay, so stop run into high liquidity. Trap participants, yeah, they're Shark Blue. This is it. They're all in here, right? And that's another reason why we look for the move as a measured move. Right, because it's all of these guys in here, and then where are they going to place their stops? Well, we just found a lot of them right here, okay, right in this move here. Okay, now the big question is it going to accept above 30? Okay, so we don't know that yet. It's still trying here. Mr. Cage is at 3,500 orders. What, down below here? Let's see. No, it's about we see 269 and 214 down here. What colors would I focus on? Well, the best to focus on here is the high liquidity. Okay, and there it is. Okay, and we're stopped out. All right, so look at the high liquidity in here, and did it transact? That's what we want to determine. All right, this is one of the most meaningful things I think in the market. Okay, high liquidity and if it transacts. We want to understand that. Okay, because this is where those buyers met the sellers, and then where are they next? Well, now they're up here, 39 and 40. Okay, and will they transact as well? Okay, do they stay in the order book? Right, because once we start to understand that context in here, that's where we'll start to understand, like, well, we know there's buyers, aggressors, they're trading into these guys here. How much more buying pressure do they have? Okay, that's where we start to understand, again, context. Okay, understand the limit sell orders up here. Are they absorbing all of this buying pressure? Okay, and right now you can see that they are clearly not absorbing it, but they are getting filled. Right, so this our idea in here, well, I mean, it's a pity, like, we kind of turned our heads. I mean, it would have been great to take some off in here, but we didn't, and that's what happened, and that's fine. We can look for the next move up into our kind of 45-ish level here, and then look for maybe another opportunity. All right. Anyway, any questions on that with the measured moves or understanding? So Shark Blue, I hope I answered your question there. Okay, identifying that these sellers in here are the buyer. A lot of them are buying back here, and it's not all, but this is why we can start to understand, like, the market breadth, some of the measured moves, some of the stop runs. A big stop run above the swing here, okay, that makes total sense. Okay, and then other people just getting grinded out as it continues higher here. All right. Let's see here if there's anything else I can go over. Yeah, I want to take a look at, and why I set this up earlier in the webinar here, was our trade statistics in here. Now this is NASDAQ. Oh no, I not open it for S. Yeah, no, I didn't open it. That is a pity. Okay, so I don't have any trade statistics here. All right. Well, we can take another trade and see what it looks like. Yeah. Well, we'll keep an eye open here and look for something else. See any questions. So guys, I don't know if you saw we had the Bookmap Academy meeting yesterday, and just I'll show you that here. It is on our YouTube channel right here, and we did something a little different yesterday. I was going through crypto, the crypto competition that we had. And it was a debrief on the bigger picture, like what did people think about it, the content, the winners, or a lot of high performers, and their feedback on it. Um, I thought it was excellent. Um, and we'll do more competitions. This was a very particular competition for the Bookmap Academy. You had to be an Academy member in order to join. Anyway, the going through the setups that and criteria other traders looked at and understand, like, what they got out of it, and what they learned, and that's exactly what we do in the academy. So if you're interested in that, the academy, go to bookmap.com, and then click on the more button here and go to Bookmap Academy, and then you can apply here. Okay? And then you'll apply for the Bookmap Junior Academy, and start creating content so we can give you feedback and mentoring. And then if you do really well and meet some thresholds, you can actually graduate into the Bookmap Academy and get Bookmap for free. Okay, so you can also get the MBO bundle for free as well. So if that interests you, jump over here to this Academy page and check it out. All right. Okay, so our measured move is just coming up here. And then let's take a look at our higher time frame in here as well. Okay, just coming up to it right now. We just saw a quick spike there. Okay, yeah, met our measured move on the way up. All right, so we're anticipating a pullback now, and yeah, I mean, I don't know if there's no kind of strategy for trading this pullback. We're either looking for a reversal or a trend trade or continuation pattern. Right now, the continuation pattern is still in play, so we're just up at our measured move, and not a good idea to trade a continuation pattern up at its measured move. But nonetheless, that's what we're seeing. And here's a small little flag pattern in there already. Small impulse pulse move, pull back, and then followed by another kind of impulse move up into high liquidity here. And we have our figure as well, 52.50, just about to transact. All right, so let's see. Yeah, I wanted to I want to show you guys this trade simulator, but just waiting for something in here. We can zoom in, go with a smaller time frame, and look for something here. Okay, typically the higher time frame stuff, this was a bigger move that we were looking for in here, and it didn't work out, but we were paying a little more attention, we would have made something work out here. That's for sure. But anyway, that's okay. We can just move on. All right, so now we're trading up into the high liquidity up in this area here, and let's take a look. Let's look for a small reversal pattern, a potential reversal pattern in here. Okay, so and our criteria in our reversal. All right, so now again, this is going to be smaller time frame because I want to show the not only the trade management, but I also want to show you guys the journal, and how you can glean information from that. So let's take a look here at bookmap.com and our reversal pattern. Okay, so go to education, and then in education, click on strategies and setups here. And we're going to look at, we have continuation pattern and we have a reversal pattern. We'll have more in here soon. This is the reversal pattern. It's an inverse head and shoulders pattern here. And what we're looking for in here is strong volume on the downtrend here. Okay, into, this is important, into a higher time frame level. Okay, or it's moved in ATR, an average true range into a level here is the best. And then what we're looking for, high liquidity on the bid getting filled here, and then a pullback here, and we're going to start to look for clusters of buying in here. Okay, so you'll start to see that in here, and you'll start to see this downtrend wane. Okay, it starts to kind of turn around a little bit. We see high liquidity on the bid in this pattern here. Typically, it will transact. And then we see even bigger clusters in here, but we have not seen things reverse yet. But we're looking for this volume and order flow shift. Okay, this is the criteria we're going to look for as well. All right, and high liquidity filled maybe here on the offer. And then on the pullback, we're looking for a higher low and low volume on the sell side here, and high liquidity up at a higher level in here. Transacting is the best. And a lot of times we won't get that, but that'll be your shoulder. This is where we're looking for the buyers to start to step in. Okay, now this is a little different than what your books typically show. They're looking for entering up in here somewhere. We are not, or we're covering this in a more aggressive way because we have the liquidity in this context of liquidity and volume. And then we're looking for, once we see those buyers start to come back in, we're looking for a move back up to here. Okay, maybe take some off up here. Stop loss can go below the swing. And then you're looking for the maybe taking some up here, but then you're looking for it to continue though, right? Or at least you're looking for the reversal. So you're looking for a measured move again. Here's your reversal structure, and then high liquidity up in here filled, and this is where your measured move comes in. Okay, just like our double top in essence that we were just looking at. This is equal to this. All right, and that move is done at that point. Okay, but a lot of times these are really strong, powerful patterns, and now you can parlay this into a continuation pattern, and then you can start to look at a pullback. This would be your flag pattern in here. Yeah, we just had a earthquake, 4.7. All right, New York City. All right, so anyway, that's the pattern. Then we can look at your continuation pattern after that. Okay, so it typically will unfold if we see the criteria. Okay, as simple as that. All right, so let's look at our potential reversal pattern up in here. Okay, so let's look at the volume on the way up. High liquidity getting filled in here. That's good. Here we can see not a head and shoulders, but kind of a triple top. We do see a cluster of selling, and we don't see it trade into the figure nor this high liquidity up here, and that's not good. We would love to see that, and then we would like to see this cluster of selling, and then we're looking for this the move back in here on lower buy volume, and then more selling to pick up in here, and that's when you're looking for your entry and the continuation back down into maybe this 39 level here, or reversal. Right, so we're late to the party. We going through the setup and the criteria, we kind of missed it, and that would have been the entry in here, and we're looking for the move back down into this 40 liquidity here. Okay. Okay, so this is on a smaller time frame. I don't know if this is clear to everybody. Let's see here. Look at the sell volume on that black loss of volume. Was unable to get anywhere. So let's see, slow down. What are you looking up at? Yeah. We're at the same thing, basically. Let's see. Yeah, you're talking about, yeah, in your image, you're talking about this volume in here. Yep. Yeah, exactly. And then another kind of couple of clusters in here. Now, like I said, we came late to the party in here. Our entry would have been in here someplace. And it's a little iffy on that as well because of this liquidity. I would have felt a lot better if this transacted and then we had this set up, like I had mentioned. Okay, but our measured move or our move down into this 40 level is already unfolded. Right, so anyway, that was the what we'd be looking for in here, okay, for the criteria. We can jump over the NASDAQ. Maybe we see something a little different. Yeah. Okay. So NASDAQ, pretty nice. This criteria is a bit better here. We have our high liquidity. This is kind of what we're looking for from the ES in here, right? We were looking for the transaction and a stop run up into this high liquidity here at this 18,324. And let's take a look at it here. Okay, that would be your head. Okay, this would be, well, it's kind of a double top-ish. Okay, but the criteria is there, at least for that move. Yeah, no, actually it does turn into your head. God, this is a beauty. Did anyone grab this one? This is a beauty. Okay, so a move up into that liquidity. Okay, look at the sell cluster here. So we're getting insight. High liquidity in here filled. Also, it looks like some in here. Certainly up here, we just checked that. And look at the seller cluster here, and also the selling in here. Right, so this is pretty nice, looking pretty good here. Now, maybe we can look at this as a possible. Well, this could be shoulder, head, and shoulder as well on a higher time frame. But we can look for this as a possible a continuation pattern now, right? So that would be all of this up in here, the measured move, the pullback, and then the continuation, right? So let's see if we can kind of inch into this one. Okay. Now, for a continuation pattern in here, what we're looking for though is high liquidity on the offer to get filled in here, and I don't see anything like that right now. So it's more of a volume event than anything. Okay, back to where it dropped from up here. Yep. So Yeah, hard to hard to see here with the Nasdaq. Some of the liquidity did get filled in here, it looks like. Yeah. And we're getting a pullback here also in the S&P. All right, so here's something to take a look at now. This might be our shoulder, head, and shoulder. Okay, so again, we're really looking for some liquidity in here to give us a kind of a heads up. But if this is going to be the reversal pattern, we really want to see that conviction on the sell side, and we do see a lot of selling in here. Coming into this. Okay, so let's take a look here, and it's kind of range, a little bit range bound right now. Okay, up at the top of this range here. Boy, I hate to force criteria and just to demo this, but and every time you start squinting your eyes at something to try to force a trade is not a good idea. It should your criteria should be simple to read and understand. And right now it's not. All right, so we'll pass on that. Oh yeah, this is where I wanted to go. This is what we're talking about, that outside day. Okay, this here, this move here, we'll get rid of all of the drawings in here, right? And let's take our trade management off for the moment. So I guess we'll have to, yeah, have to turn that off for a moment. All right, so the outside day that we talked about on the candlestick chart, okay, this being an outside day, and then here's the pullback actually on that after this big move here. Okay, this is an inside day here, right? The concept though on an outside day is that there is tons of volume in here moving price outside of the previous range. Okay, that concept though works on all time frames. Okay, so in fact, that's why we were looking for kind of a double top in here, and instead what we got was an outside of this range move, okay, and a measured move up into 45. Right, so the point I'm trying to make here is the concept is exactly the same, and then what you're looking for is the a lot of volume here to move it away from this zone in here. Okay, now we may see it come back and retest this zone here, okay, back to 52.30 where it broke out from. Okay, sellers starting to come in, right? So that's a possibility in here. You can, you volume profile guys or profile guys, look at this very low volume node in here at 35. Okay, I mean, look at a lot of liquidity. It transacted here at 35, yet it is a low volume node. Okay, because very little, or there was transactions, but very little in this little zone in here transacted, and it didn't hang out here for long. All of this back and forth and all of this volume in here, it led to the stop run as well as a measured move outside of the range here. So the concept of the outside day is exactly the same on this time frame here for an outside of this period here. Okay, and that's why we're looking at the acceptance and rejection as well. Okay, so Anyway, we can look for it on all time frames. Like right now, here is a little range that we are in right now. Okay, and we're going to see a break of that range at some point here. Okay? And it's going to be on high volume. Okay? There's some high volume here. Okay, looking for this 36.5 to trade. Okay, because that's where the buyers are. Sellers want to meet them. That's where they are. We're seeing the selling coming in. There's the move. Okay. Okay, let's look at the context. Did it transact? Yep. Okay, and they're still here. It didn't. Not all of it transacted, but a lot of it did. Okay. Now it's transacted and moved through. Okay, on high sell volume. Here's our flag pattern, in fact. Okay, on the lower time frame. Okay, right here. And now it's done. Its move is done. Okay, so what are we looking for then? Probably consolidation now. Okay, we may get a trend, which would just be a continuation here. Pull back and then continuation down into our 32 liquidity and then our 30 liquidity down here. Okay, see how the selling picks up and is moving it away from this level up here. Okay, and is still in its markdown phase. Okay, still searching for value, or what other traders think of it right now. It is, see how in here we don't really know in your volume profile. There's not a whole lot of transactions in here. That's why we revisit and re-auction back into these areas. Okay, let's see, any questions here? Nope. Can it go to 36? Well, yeah, I got to you a little late. That was 7 minutes ago, and we've already seen the markdown here. So another thing that we've covered for quite a while too, like is when you look at these moves in here, like this move here, it is on that high volume, and they, you know, the sellers moved it, and this is the zone it is going to trade in, unless, now we're starting to see it unfold immediately here, unless you see high volume, buying volume, move it back above and through now, and it already has, right? So then I'm looking for it actually to trade back here to 40. Okay, and unless there is, a tremendous amount, I'm looking for a low volume pullback here on the sell side. Okay, because it was high volume on the on the buyers that moved it up. Okay, so, and we're not getting that. We're not getting a low volume pullback in here, right? So what we look for in these areas in here is this to dominate. Okay, and then this price action in here, or all of the volume within here, we're looking for it to be a lot less of buy volume. Okay, more sellers, especially at the swings up in here. Okay, we're looking for a lot less sellers. And then typically what we're looking for is that selling cluster in here and the continuation pattern into high liquidity. Right? Now you can see very clearly that didn't happen, that didn't play out. All of these sellers in here, some buying back up into these areas, buyers, they break through, it retests back to it, and then we see more buyers come back in. Now this is kind of iffy in here too, because this buying in here, look at the selling pressure in here. Sellers could have dropped it through and traded right back down into 30. Okay, but they didn't. Right, so buyers are, in fact, we can see a smaller one in here of the selling in here, and then see the buyers back up above it here. Right, now this is about structure and volume. Okay, we still don't see the context of the liquidity in here. Okay, the higher liquidity is up here at 40. It has not transacted. Okay, the higher liquidity on the bid is down here at this 32.5, and it has not transacted. Okay, so this area in here it can be very sloppy. Okay, and we can get this kind of, buyers moving it up, sellers moving it back down, and it just bashing around in here. A lot of times we don't get too much conviction or criteria from the order book in here. And this will help you filter your trades. Okay, not taking some of these trades. Okay, looking for your criteria. And why I'm kind of trying to tie these things back together. For example, yesterday in the crypto, or in the Bookmap Academy meeting, both Stan and Slowdown all talked about the way that they traded, and they did really well in the competition. And they talked about, especially Steven, talked about criteria. Okay? That criteria is what he's looking for, and if he does not have it in his trade, he does not take the trade. Okay, so this is what we're looking for as well, and that will give us conviction in our trade, in our trade idea. Okay, now we did have criteria earlier. Okay, right in here for this double top. Okay, again, I'm sorry to see this as a loss here, but and I'm sorry that we did not take some off down at our levels in here. Then this would have been a small winner instead of a big loser. Okay, instead of like holding for a total stop out here. In fact, like I had mentioned, I wanted it to go against us so that we could go over scaling in or to a loser. And it's not a loser. It's still in play. It's just that you are it's your position sizing that you are utilizing here, right? So anyway, you've got to have criteria based trades, okay? And that's what we want to go over again and again. And that's why we talked about what we talked about in the Bookmap Academy meeting. Okay, so yeah, we can look for maybe another small criteria based trade idea in here. We may have to go over to NASDAQ. We might get a little more out of it, but let's take a look and see what's going on in here. Okay, so we're just coming back up to the top of the range in here, and let's take a look at this price action in here. Okay, sellers totally dominated here. Okay, buyers coming back up to the top of the range though, here and here. Okay, so likely to trade, very likely to trade into 40. All right, now we can go over this here. So if this is the case, now let's just look for it. We'll take a small position in here, and this is ridiculous, but we're going to get out at 40. Okay, I'm going to move my stop down here, and I'm going to say like, and we're out. Okay, what I want to show is, we'll wait for another one. I was hoping we'd get this would fail up here. It would come back. We get a pullback, and we'd have one position here, another position here. We'd get filled on both. We would take some off here, and then we'd have holding for the runner. Okay, now, and I'm not a big fan of holding for a runner idea, and we'll talk more about that in the near future. But scaling in and scaling out is what we can discuss in the future here, and leveraging. Okay, using these markets to leverage. That's one of the big advantages of these futures markets. We just have to know how to use it. Okay, it's a double-edged sword. It can cut you and really hurt us. But if we use it correctly, then it will work with us. Okay, and that's what I wanted to go over today with scaling in. Okay, so the ideas, some of the ideas in the trade management. Okay, so hopefully we'll get another example in here. Okay, so we're getting our breakout actually. All right, so now we're looking for that move up into here though, just up into here. Okay, we have high liquidity at 42, and this is where the market dropped. Okay, all right, so now that's the only criteria we have. Okay, but we see some selling here. All right, so let's put in there's our I got filled immediately, and then the move back down to where these buyers broke out. All right, so now let's just zoom out a little bit, and what are we looking at? All right, so are we looking for maybe a bigger move back down into I don't know, this level here at 39, or maybe back down to 35, 37, somewhere in there. We can look at this here as all of this is selling. Okay, and these are pullbacks to that selling. Okay, so then if that is the case, then well, we can consider a possible scale in again. Okay, so that's our trade idea. Right, so look for, I would love to get another pullback to maybe here. Right, and then I would take some off here. It's not a bad idea in front of this liquidity, and this is where they broke out from in this little level here. Okay, so that's the idea. Okay, how does this look here? We see our sellers. Here's our buyers back to this cluster. I don't see buyers. All right, so let's add another one on. Okay, so I'm still looking for sellers. I don't see many buyers here. I'm looking for sellers. Now we're starting to get some buyers. Okay, but it's just retesting back up to here. Again, not trade recommendation. I'm trying to go over some concepts here for scaling in and scaling out and trade management. Okay, now we've got a pretty big position on. Okay, now, well, you know, we've got 3. Now, I mean, it could be 30 for some of you guys. You know, maybe or maybe it's something like 15 or something. Okay. All right, so the same thing is happening to us again that happened to us earlier. This is where we saw the selling. Here's a retest. We had our criteria, okay, our level. We had high liquidity, and we see our cluster. We got a pullback, and we're looking for a continuation. Well, buyers came back in to the top here. Okay, so not looking good, not looking good at all. But Let's see if it rejects or accepts here. Okay, so it's up at our level here, and we're still getting buyers. Okay, so we're going to get stopped out. All right. Back up to this swing here. Yeah, and we have high liquidity here as well underneath. All right, so yeah, that one didn't work out either. Too bad. It would have been nice to have seen use this trade management in here. Okay, nice little stop run through here. Let's see here. Let's look at our trade journal. Did that work out here? I think it did. Kind of. Okay, so yeah, it did, but not one that we took earlier. Just the last one did show. All right, so anyway, we can look at some of our trade management in here. So here it is here. This one, and this was that small little winner that we had. Yeah, so that previous one does not show up in here. That double top one, which is a pity. But anyway, the one that we just had with the max size 3 gives our entry, exit, profit or loss, what type it was, and then maximum favorable, maximum adverse excursions here. So it went 7 in our favor and then 12 against us. Okay, before we exited the position. So our 12 was up here, basically. All right. So yeah, God, I really want to demo this scaling, but just didn't get quite the opportunities here. See if we can get. Well, we do see a possible continuation pattern here. Okay, back up into 50. Let's see. Let's look for it. Yeah, just not seeing liquidity up in the higher levels here, so I'm going to pass on it. I mean, they're starting to pull here, and we do see our buyers, and we never traded to that 52.50. Okay, and we are looking for that. All right, this is actually not a bad idea then. So let's take one up here, because let's suppose we see huge volume up here. We're looking for the break right now, right? So there's a couple ways to play it. Now this would be a half or a third position, okay? Because we're looking for it to work right now and trade up to this 52.50. But it's a small position. Now what we're going to do is move our stop down here, okay, and then look for a pullback, and then we're going to look for where might it pull back to give us that opportunity, okay, because this is only a small position in here, right? So well, maybe a pullback would be to the swing down here where the buyers are dominating, right? So that means this whole area in here is our trading zone. Okay? Maybe we want to scoop it up down here, you know, somewhere maybe around the right in here. You'll notice these areas in here can be excellent because here's a swing, but this is where the buyers really came in. Okay, so stop some people out. You can get a great entry here and then look for taking it right back up. Right now, this is not our continuation pattern, because this is turning into more of a range bound in here. But the idea is kind of similar in essence. Okay, and this is why I want to go through these things about, I really don't like calling these things like a flag pattern or whatever, a kind of pattern, whatever it might be. It's about understanding this move in here, and that it accepts in that area. Right, this was our impulse move, and then we're looking for the acceptance in this area in here. Right, that's the concept. Therefore, we can kind of, if this was like a flag pattern, let's just mark this up. Flag pattern is, well, we have our kind of consolidation, our impulse move, our pullback, okay, on a low volume pullback and not a full, less than 50% retracement, and then yeah, maybe we get one more, and then we get the equal measured move in second impulse move, right? Okay, so now let's take a look at this in here. The concept is the same, that this is our strong impulse move, and we just see a lot of it pulled back heavily, but we're still reading the volume in here, and it looks pretty good. We see more buyers still here. Okay, a little bit of selling starting to come in here. Another cluster of buyers coming in here, but this flag pattern, we're going to skew it basically. You see a big move like this, and it could be from outside of a consolidation area, right? And then what we're looking for is the here. Let me clear these. It's getting kind of messy. All right, so we go from our consolidation, our impulse, and then a steep pullback. Okay, so now it's not really a continuation pattern, but we know that there was strong volume in here, okay, on this strong buy volume. Okay, so this is it pulled back tremendously. Okay, so it's kind of like a now we're looking for another move on, and we know that there's more buyers in here. But we're looking for the move not to go like this, like in our flag pattern. We're looking for it just to the top of the range now. That's it. Okay, now it might break out, and then it might turn into like a flag pattern up here and break out, right? We don't know that. But what we're looking for, though, is this move in here. Okay, we're looking for our pullback to here, and then we're looking for the volume to trade back up into here. Okay, and that's where you take your profit, is the top of the range. So it is a range bound strategy, but within the move of the impulse, the initial impulse move here. Right? I hope that makes sense. Rob, does that make sense to you? Do you understand what I'm saying? Understanding the concept is really the key here. Okay, so and you can see, like, we almost in fact, our area here, we'll come in and double check on it here. We're just about to get filled here on the breakout here. All right, but we want to check on this here. It looks like it traded right to us in our limit order in here, and we didn't get filled. Yeah, and this is in sim, guys. It traded here a bunch of times. In fact, 50 contracts traded here, and there was 90 contracts here, and you can see the little white, or the blue line here. This was my position in the queue. Okay, so there was, I don't know how many ahead of me here, but if this represents 90, this whole green area, so if it traded maybe like 20 to 30 more, I would have gotten filled, right? And it would have been the bottom tick. This is why bottom ticking rarely happens, okay, with limit orders. It has to trade through your order, and using limit orders is fantastic, but you will be at a loss. You rarely get filled right at it, okay? that's another way to look at this. If you want to use limit orders, you're going to have to be taken into it, typically. Okay, even on a pullback, you would be taken into it, right? So this would be a small pullback here, for example. Right now, we didn't get, so we're pretty much having a horrible day here, because now we noticed in our pattern in here that we're looking for, and we got in our half position here, and we're looking for entering our next half here at this area. Okay, that was our logic, and we just didn't get filled here. Okay, just a few more, maybe we would have gotten filled, and then this would have been sitting pretty for this move up. Okay, so anyway, another way of looking at things, and we're going to continue to do more and more education like this. Do you guys like this? If you guys do, can you yeah, give a like, maybe over in YouTube, or a thumbs up in the chat, Discord chat, or a reason why you don't like it. Because I want to go over more and more about, we're traders, we're active traders. This is what we want to cover in detail. Okay, and it's not dictating a specific way. We're setting a foundation for many different ways of trading. So we've gone over many different ways of scaling in and scaling out, for example. Okay, what was the mental state? Why we did what we did? Okay, look at this horrible entry up here, right? But we said it's for half a position, and this is our next half down here, and it hit it. We didn't get filled. Okay, this is the kind of stuff that it's trading, because this drives you crazy. It drives me crazy. We should have gotten filled here. It's like it hit my price level. I should have gotten filled. Well, that's not how it works. That's trading. Like this here is this is how it works. You're in the queue. You're in the queue, and you out of all your now they're starting to pull liquidity down here. In the queue here, you can see this is or I'm sorry, this is yeah, in the queue there was I don't know, somewhere around 90, let's say, and they started to eat away into this liquidity here, and my order went toward the front of the queue. It just didn't go enough to the queue, into the front of the queue. So I'm still waiting in line down here, and that's it. All right, so anyway, yeah, just and it's unfortunate, right? MAE is maximum adverse excursions. Okay, adverse is the key word in there. Okay, so it went against you. Let's take a look. Let's take a look at our journal here. All right, how did it work out? This is it here. All right, so we had it went against us 15, it went for us 11. Okay, this is our favorable here. This is not good. However, we only had half our position on, right? So this is what we got to keep in mind. Yeah, maximum adverse excursion. Thank you, trader. Oh God, this just kills me. Seeing this. But anyway, the and where is this going here? Yeah, this is something to really be to really watch here today. Well, we're way over our time limit. I'm sorry, guys. I kept rambling, and we're talking about trade management and stuff. We're way over our time, so I gotta wrap it up here. But let's see, what was I going to mention first? Well, yeah, this was, oh yeah, our maximum adverse excursions and then maximum favorable. All right, so we know that this went against us a lot, but we know that this was half a position. Our other half was down here. If it hit here, then our this would have you know, dollar averaged our cost to somewhere around 45 or so, somewhere around in here between these 2 points, right? That would be the midpoint, 45, let's call it. And then it went against me from 45 to 43. Okay, so it wouldn't have been 11 ticks. It would have been well, it would have been 2 points basically. Right? I don't know, something like that. But anyway, the it would have looked different. Our numbers would have looked different, and they would have been more favorable. And it wouldn't have gone against us 15 like this, right? And that was our plan. It didn't work out the way we planned it. We were left hanging here, even though it hit our price level, which is fine. That's trading, right? And this is like you know, do you want to chase it after something like that? That's a whole nother thing. Or do you want to look at your trade management in a different way? Okay, so for example, a lot of times I won't do this. I won't put a limit sell order right here, or limit buy order right here. I will put it up in front of it. Okay, because I want to make sure, I know it's going to go against me. I want to make sure I get filled. Okay? Or better yet, if I'm right in front of the screen, I look for you know, another small setup in here to give me that entry. So you know, maybe I'd look for it would be a lot worse entry point than down here. It'd be a lot worse. It would be maybe here or maybe in here, right? If I got lucky, I'd look for a pullback in here with another limit sell or limit buy, and then maybe I got filled in here. Okay, I likely would have put that limit buy after seeing this right by this cluster and right on the top of this range here. So I probably would have gotten filled in here, and it would have gone against me, right? So yeah, probably at around 44.50 or so. And then my average would be from 46.75 and 44.50. You know, I would have been it would have been somewhere in here, 45, 46, 45.75, something like that. Right, 45.50, I don't know, something like that. And it would have been not as good, but I would have gotten filled and would have been able to reap the reward out of that. Okay, so again, these are questions that you have to grapple with. Okay, we can go through the different ways of trading and managing the trades in here, but how you actually you know, execute it and what's comfortable with you, that you're going to have to answer for yourself. Okay? I'm not pawning it off on you. It's just, that's just how it is. Like, what do you feel comfortable with? Okay, there's multiple ways to do it. Okay, either you're comfortable with setting it down here and bottom ticking it. You have to be equally comfortable with being left behind. Okay, or you got in with a market buy in some of this area in here, but you got a worse price, and you have to be comfortable with both. Okay, or you got a limit on your pullback in here, and you got a worse price. It went against you a little bit, and you also put on the risk of it really starting to see a lot of sellers in here and move it back down lower. But you have to be comfortable with that as well. And you might not have gotten filled in here too, on your other limit buy here. You might have just seen this and it just continued on up, and you have to be comfortable with that. Okay, so because this is what's going to happen. At the end of the day, you're going to have varying results on this, as you guys know, and I don't need to tell you that. Well, there's a coulda, woulda, shoulda. Well, then you, what you do is you go back and you replay this in replay mode, and go through your what you would have done differently. End of the day, okay, and trade it too. Okay, trade it in different ways. Get comfortable with it. Use the trading functionality in replay mode in Bookmap. Trade it with the limit orders in these areas. Trade it with a market order in these areas in here. What do you like? What works best for you? Right? So yeah, I'll leave you guys with that to think about that. Let's just go back into the bigger picture here, because it is Friday. This is something that be very careful with on Fridays, because this is what you know, I've been on both ends of this, on the positive end and on the negative end of like this huge move that we saw yesterday, and then we see low volume on Friday, but it continues to grind higher all day long, right? So we could come up and trade up into, you know, back up in here at end of the day, 92 or 5,300 up in here where it dropped from yesterday. Okay, so look at your strategies, and these are very, I find them to be kind of tricky moves, because it will just grind higher all day long, and you just have to go with it. Maybe you want to scale in and out of those moves as well. I mean, look at the selling in here, and yet on low volume it's grinding higher, right? I've seen, or I've experienced it so many times, like on Fridays, you know, a lot of traders, like, they get really hurt because it's like, well, it's got to be a pullback, right? It's got to, no, and look at all this selling, so therefore you know, it's got to pull back, right? I got to be, you know, I'm going to continue to add into my losing trade, and it just continues to grind higher against you all day long, right? So just be careful of that, yeah, be on the lookout, and be very attentive to that possibility, because Fridays can be very tricky. I find it's not a good day for me trading a lot of the times, exactly why the reason being of, you know, what I'm covering here. So anyway, all right, let's wrap it up, guys. Thanks everybody for coming. Have a great weekend. We'll yeah, give me some feedback, guys, over in Discord or in the Academy, what you think. This is kind of a new direction, and I don't know what I think of it. It's not, we're not going over like recommendations or anything like that. This is, and you guys know this isn't demo, and we're doing it for demo purposes, with an agenda in the education about trade management considerations here. That's our next step, and this is the direction that we're going, right? So yeah, would love to get your feedback on it. Yeah, and like you know, to wrap up here again, like our Bookmap Academy meeting, someone like Steven or Slowdown or Stan, as they covered yesterday in that crypto competition, they went over, they just were very patient, waiting for their setup to unfold and their criteria within their setup. Here we don't have that luxury. You know, it's we're gonna, to go over these concepts, we're gonna have to jump in and out pretty quickly, and typically, which is fine, we can get away with that. We just have to look at lower time frames, that's all. Okay, time is a big component in trading. You need to have an understanding that these things take time to unfold, and being patient. As long as you stick to your plan and look for it to unfold with the criteria that you have studied, that is your edge. And then now how you manage that trade can either make you or break you as well. All right, so that's why we're going over the trade management in here. Thanks everybody for coming. Have a great weekend, and we'll catch up with you on Monday.